laughing at the load of BS the Fed Treasury and Bailout Corporation just put out there. To support American businesses and households, the Federal Reserve Board on Sunday announced it will make available additional funding to eligible depository institutions to help assure banks have the ability to meet the needs of all their depositors. This action will bolster the capacity of the banking system to safeguard deposits and ensure the ongoing provision of money and credit to the economy. Wonderful. How do you plan on paying for it? The Fed also said that it is prepared to address any liquidity pressures that may arise, which in turn has just unveiled the first bailout acronym of the new crisis. The Bank Term Funding Program, BTFP, or by the fucking, what did Zero Hedge put in? By the fucking money printing? Some more details. The financing will be made available through the creation of a new Bank Term Funding Program, offering loans of up to 1 year in length to banks, savings associations, credit unions, and other eligible depository institutions pledging U.S. Treasuries. Now that's funny. How much are those loans going to be? How many banks need it? Agency debt, mortgage-backed securities, and other qualifying assets. Garbage. These assets will be valued at par. The BTFP will be an additional source of liquidity against high-quality securities, eliminating an institution's need to quickly sell those securities in times of stress. The Fed explains that the Department of the Treasury will make available up to $25 billion from the Exchange Stabilization Fund as a backstop for the BTFP. While the Federal Reserve, while the Federal Reserve, which was completely clueless about this banking crisis until Thursday, or apparently the dipshit trade, which I'm sure they're discussing right now. People are sleeping under their fucking desks. Does not anticipate that it will be necessary to draw on these backstop funds. We anticipate that the final number of the needed backstop liquidity will be somewhere north of $2 trillion. What is more notable is that the BTFP, or Buy the Fucking Pivot facility, will pledge collateral at par, not at market value, thus giving banks credit for all those hundreds of billions in unrealized net losses, allowing banks to unlock liquidity based on losses which the Fed and the Treasury now backstop. Yeah, just sit and think about that for a second. There's a nice little chart for you. More from the Fed bullshit. After receiving a recommendation from the boards of the FDIC and the Fed, and Treasury Secretary Yellen, after consultation with the President, approved actions to enable the FDIC to complete its resolution of Silicon Valley Bank in a manner that fully protects all depositors, both insured and uninsured. These actions will reduce stress across the financial system, support financial stability, and minimize any impact on businesses, households, taxpayers, and the broader economy. The board is carefully monitoring developments in financial markets. The capital and liquidity positions of the U.S. banking system are strong, and the U.S. financial system is resilient, though it isn't. Depository institutions may obtain liquidity against a wide range of collateral through the discount window, which remains open and available. In addition, the discount window will apply the same margins used for the securities eligible for the BTFP, further increasing lendable value at the window. The board is closely monitoring conditions across the financial sector. The fuck are they monitoring? They don't even know what they're for. And is prepared to use its full range of tools to support households and businesses with full range of tools. Printing more money, putting everybody into poverty and inflation, and will take additional steps as appropriate. But wait, there's more. Concurrently with the Fed statement, Treasury also issued a joint statement with the Fed and FDIC in which Powell, Yellen, and Bloomberg all said that they are taking decisive actions to protect the U.S. economy. Probably should have done that a long time ago. Shit's garbage now. By strengthening public confidence in our banking system. This step will ensure that the U.S. banking system continues to perform its vital roles of protecting deposits, providing access to credit to households and businesses in a manner that promotes strong and sustainable economic growth. Again, they're still bullshitting about deposits. deposits. Checks they can't cash. When the real problem is even bigger than that. Additionally, the trio announced that all depositors at Silicon Valley Bank will be bailed out, as will the depositors in New York Signature Bank. Congratulations, you have 2 banks. Now what about the rest of them? Which has just failed as well. Wonder why. And whose depositors will be made whole after invoking a systemic risk exception. After receiving a recommendation from the boards of the FDIC and the Federal Reserve, and consulting with the President, Secretary Yellen approved actions enabling the FDIC to complete its resolution of Silicon Valley Bank, Santa Clara, California, in a manner that fully protects all depositors. Depositors will have access to all their money starting Monday, March 13th. No losses associated with the resolution. Borne by the taxpayer. That would be borne by all of you through inflation. We are also announcing a similar systemic risk exception for Signature Bank, New York, which again just pours more fuel on the fire. Which closed today by its state chartering authority. All depositors of this institution will be made whole. As with the resolution of Silicon Valley Bank, the losses will be borne by the taxpayer. No, it'll be borne by all of you, even the garbage who don't pay taxes, through inflation. While depositors are safe, creditors and equity holders are not. And again, this is another one where they're talking about deposits, just deposits. So now basically all the equity holders, all the shareholders, and all the bond holders are fucked. Which means what for your banking industry? Because it's not just these 2 banks. It's damn near all of them. So logically, go through the steps there. What else that's connected to, including equities. Shareholders and certain unsecured debt holders will not be protected. Senior management has also been removed. You dipshits, you shouldn't have been there to begin with. Any losses to the deposit insurance fund to support uninsured depositors will be recovered by a special assessment on banks as required by law. Finally, the Federal Reserve Board on Sunday announced it will make available additional funding to eligible depository institutions to help assure banks have all the needs of their depositors. Nobody else, including people who aren't their depositors and have to pay for that shit. Conclusion, the U.S. banking system remains, I can't say it without that, on a solid foundation, in large part due to reforms that were made after the financial crisis. No, and that's another good video too about Dodd-Frank and all the stupid shit they did there. But that ensured better safeguards for the banking industry. Those reforms combined with today's actions demonstrate a commitment to take the necessary steps to ensure that depositors' savings remain safe. Translation, the Fed's hiking cycle is dead and buried. Well, see, that's the thing. Not really. No. Even if the Fed doesn't, raise rates, the market will. And everybody else gets to pay through inflation. And here comes the next round of massive liquidity injection. It also means that the Fed, Treasury, and Bail-in Administration Corporation have just experienced the most devastating humiliation in recent history. Just 4 days ago, Powell was telling Congress he could hike 50 basis points. He needs to bring rates back up to Volcker times, 20%. And here we are now using taxpayer funds to bail out banks that have collapsed because they couldn't even handle 4.75%. And somehow the Fed has no idea. And the dipshits could not handle the most fucking plain vanilla of plain vanilla trades. This is nothing like 2008. It's much worse. Yeah, and there's the kicker over there. To summarize, new bank, Signature Bank, has been closed. All depositors, the Silicon Valley Bank and Signature Bank will be fully protected. Wonderful. Now what about all the other banks? Shareholders and certain unsecured debt holders will not be protected. Again, just deposits. And then don't forget all the other derivatives that fucking blow up when the underlying is over $500 billion. Just think of how much the derivatives are. New Fed 13.3 facility announced with $25 billion from ESF to backstop back to bonds, which is bullshit. As we said earlier on Twatfest, this is a regulatory failure of historic proportions by both the Fed and Treasury. No, this is not a regulatory failure. This is a failure. I would disagree with that. I mean, this is a failure of dipshits who should not have had their jobs because they were too stupid to fucking foresee inflation after the largest amount of money printing in history. How did that happen? How did that happen? I don't know. Oh my god, we're woke though. Fucking idiots. This is a regulatory failure of historic proportion. No, it's not. It's not the Fed and Treasury's fault. Instead of preventing billions in losses, the Fed was worrying about board diversity, and Yellen was flying to the Ukraine. Which, by the way, those geopolitical stupidity that they commit there is what's adding to your problems here. Let's just print up another $100 billion for those fucks. Everyone should be sacked immediately. Well, that one, that's a whole different statement. But, you know, Powell, what do you... If you're sitting in that chair, what would you be doing? Yeah. It's not his fault. Oh, and if the Fed really thinks that $25 billion from the ESF will be enough to backstop a bank run of $18 trillion of deposits, again, this is the part where they can't count. And again, we're just on deposits. Zero Hedge wishes them the best of luck. Again, they're writing checks they can't cash. Which, by the way, the dipshit problem that caused all this, but one of their problems. Just one. Let's see, those were earlier notes from, again, I'm sure everybody's sleeping under their desk tonight. Yeah, preparing emergency measures to shore up banks to ensure they can meet potential demands by their customers to withdraw money. Those are two banks. You got a lot more than two banks going under. A lot more. The use of the Fed's emergency lending authority is for unusual and exigent circumstances. It signals that U.S. regulators view the issues from SVB's collapse as a sign of systemic risk in markets. Oh, shit. And again, I don't think they've figured that out yet. Being dipshits. Oh, that's another damn good video. Fucking idiots. Oh, and this is the even better part too. I'll continue on with this in another video. Yeah. You get up to about 20% or 65% of your deposits gone. Sounds like a great deal to me. Don't worry, the Fed says you're going to get it back. Whenever they feel like it, supposedly. And that's it for now.